Okay, GM. Excited to kick it off here today. So, I'm going to talk a little bit about the latest hypes and what they're looking like on-chain. So, as a small sort of reminder, we're living in a pretty special industry. And typically, in the technology industry, when you want to learn about what's happening in the product or in the business, you have to actually wait for a company to go public, and then they will put a report out every quarter about how they're doing. In our industry, we have the luxury of on-chain data, which means we can look into what any product is actually doing on a running basis. And we can use the whole collective community of understanding what's happening on the chain, which is a lot more fast-paced and a lot more faster feedback loops in terms of what's happening. So I figured, let's take some of the news and the hypes and the things you see around Twitter, and let's look at the numbers. What does this look like on chain? So without further ado, let's dive into it. So a few years ago, we had DeFi Summer. This year, a big theme has been on-chain Summer. So let's see what it looks like. One of the headliner items the last few weeks has been FriendTech. So FriendTech launched just about a month ago. It now has 143,000 users and has been this huge hype across the space. So let's see what their traction looks like. So they've actually created almost 14 million in revenues in this month, and about half of that is passed on to creators and users engaging on the platform. So pretty substantial number for an early stage project. We can also see that the trading volume of various accounts on FriendTech peaked at around over $15 million on daily volume. Interestingly, that has now been coming back. Sometimes in this space, you see a lot of projects getting a crazy hype, and then it falls off a cliff, and then it never comes back. And so it's been interesting. Just the last few days, FriendTech has actually resurged in terms of volume. And the reason for this is not entirely clear, but what you can see is it's not coming from new users. So they had a huge influx of new users a few weeks ago, as you can see here. But actually, the recent trading volume surge has not been driven by new users. It's actually by their existing user base. So that's maybe a bit of an unexpected thing to happen. So hopefully we'll get some clarity on what this really is coming from. But basically they have 3,000 daily traders, which, if you zoom out, is not a ton. Basically your favorite concert venue or theater could host 3,000 people. So even though this is been a huge story in the space, it's still only 3,000 active traders on there now. However, if you look at the volumes, so FriendTech has actually been doing bigger volumes than the whole NFT market, daily NFT market on Ethereum recently. So the NFT market is around $10 million daily now, and FriendTech has been above that, as we just saw. So in that sense, it is a decent size. But obviously, FriendTech is built on Base, Coinbase L2, based on the Optimism stack. And so let's see what sort of FriendTech looks like in the context of that. So here we see the number of active addresses on Base, which they had this slogan of on-chain summer, and it's been a good summer for them. There have been 100,000 active addresses. It's been sliding a little bit down. We can see here that at some points, a decent fraction of those users came from FriendTech, but it's not solely that. The majority of Base activity is sort of other users not using FriendTech. But you can see in terms of number of transactions, so this is Base transactions, and you can see that they are pretty driven by FriendTech, especially when they have trading volume spikes. So these spikes here, the last two ones are typically driven by FriendTech. You can also see this in the all-over market share, that FriendTech, there's 2 blue spikes here. So this is basically the number of transactions per L2. And you can see that there's a couple of high spikes for base, and they're correlated with the FriendTech usage. You can also see here that you have basically BNB and Polygon driving the majority of the transactions on L2s, but it's quite competitive. There's several players here that has a decent market share. We can also see that it's becoming more profitable to have an L2. So processing transactions and then submitting them to layer 1 for verification. And you can see this chart has been trending up. So this is the net profit from running an L2. And in total, $6.4 million was worth of profits came from the L2s. So this is becoming more of a lucrative thing to operate and do. Even though 6.4 million relative to, say, all the money raised in these systems is probably still pretty small. So long way to go, but at least the graph is pointing in the right direction. Another big theme, as always, is airdrops. What's the latest airdrop? Who's going to do an airdrop? So for instance, on Dune, there's been a ton of interest in potential layer 0 airdrop, and there's a lot of dashboards, and they're often trending, and people are looking at it. So basically, people are trying to figure out, will my address get money? How much? You know, what would be sort of my potential airdrop allocation? And in particular, layer 0 has been sort of a big sort of thing for engagement for a long while. So if we just look at that system overall, they have now 3 million users, 60 million transactions, and about $21 billion in bridged assets. So people are looking at this and saying, OK, can I get an airdrop, right? And if we look at the transaction volume on layer 0, it's been growing a lot, but then slowly sliding. So I think the question is, if the airdrop farmers are getting tired, are people, you know, not really spend this, you know, it's about a year in. And the question is like, will people like, keep engaging, or are they just trying to get into the airdrop and then they fall off? And there's actually quite a few lessons that we can learn from in previous airdrops. So what has the industry learned so far about doing airdrops? Well, the Uniswap airdrop was obviously a hugely prominent one. And those results are not super promising. So basically what you see from the Uniswap airdrop is that 7% of the wallets that received the airdrop are still holding Uni today. So not a lot. A lot of people get the airdrop and they dump it. And 98% of airdroppers don't participate in governance. So for the most part, people want to make money. They don't want to govern these protocols. You can also see that sort of for engagement and retention, it's not necessarily working out that well. So the Uniswap airdrop, the receivers of the airdrop, at the airdrop, they accounted for around 40% of the trading volume on Uniswap. Today, that number is 1%. So only 1% of today's Uniswap volume is driven by airdrop receivers of Uniswap. So this is like a massive capital spend to actually give out these airdrops. And in this case, it's kind of hard to see how that plays out in the on-chain data, how you get a return on that investment. But there's other examples. So there's Optimism. They also did an airdrop, and they had a huge run-up in usage up until their airdrop last spring. And as you can see here on the chart, basically, you know, from a relatively small base, they had crazy growth coming up to announcing this airdrop. Then seemingly, it dropped off a cliff, and it seemed like a lot of the engagement would die out after the actual airdrop was announced in around May last year. But it turns out, obviously, as you can see here, that they've been growing a lot. So it's not entirely obvious that sort of all kinds of airdrop doesn't make sense or is sort of a very inefficient use of capital. there's cases where it maybe seemed like that in the moment, but it turns out that the system has grown, optimism is getting a lot of adoption, and maybe that is partly due to the airdrop. So that's basically just a small rundown of some of the things happening in the space and what we can observe on chain. We at Dune have thousands of these dashboards, so basically anything that's happening you can look at. So again, it's an amazing opportunity in this space to go insanely deep in data. We have more data accessible to anyone than like any other industry, and you don't have to be like a resourced investor or anything like that. This is like all open for people to explore and contribute to. I think that's an amazing thing. I think it will help grow the industry. We can learn from each other instead of just learning from your own little startup. You can learn from all the other startups out there. And that hopefully will sort of drive the evolutionary loop of the space and really push things forward. So hopefully you found those things insightful. And I think we have a couple of minutes for a Q&A if anyone has any spicy, juicy questions.
Hey, they're just interested in your thoughts around the database design schema you have in place and like how you see that scaling with new platforms, new data coming through, and obviously different use cases.
The question was systems like Base?
No, sorry, like in terms of your database design and schema in kind of preparation for scale, like what you built in place a few years ago, how is it looking now, how do you foresee the future, and what kind of latest innovations are you looking at?
Yeah, so the question is essentially, our database schema and how we sort of sort all of this information, I guess. So that's an ongoing big effort, and I think luckily on Dune, we have a big community, so we have a bunch of people contributing to making sense of all of this data, not just in building dashboards, but sort of across various layers of the stack. And what's quite clear is that crypto data is becoming more fragmented. Like, initially it would be like Ethereum layer 1 would be the main thing, and most everything happens there. But now there's all these layer 2s, all these various execution systems and abstractions. And that, of course, makes it harder to make sense of it all across all of the systems. But again, I think the great thing about crypto is the community, the ability to have a bunch of people come together and try to solve problems together instead of in silos. And I think we see that on the data side as well. Like, there's a great urge to or interest in contributing and helping understand these things. And so we're trying to sort of at Dune, we try to abstract away a lot of like the running of the systems, and then the community can come together to create understanding on top of that and sort of leverage it in various ways. So we have time for one more. Yep.
Hello. A bit in the same vein, how do you decide which next chain to index next? What's your rule of thumb for this?
Yeah, great question. So it's a bit of a chicken and egg problem because we would have loved to have Dune to figure out who's using a system to decide whether to integrate it. But we typically look at just like how many people are actually building things on the chain, how many people are using those products, and what's the general like interest to analyze it. I think typically anyone building a project will say, oh, please come integrate our thing. But at the end of the day, we care about people engaging with the data and creating novel, interesting things that people want to look at. So that's kind of like the main, there needs to be sort of end user demand and sort of an active community. What? It's not necessarily super easy. It's like talking to people and doing some polling and yeah. But we're trying to make it easier for more people to get data on Dune as well, so we're not the bottleneck for everything. Yeah. Thank you. I think time's up, so thank you, everyone.